Let's get down to some macro data, and inflation, of course, has been the talk of the town when you talk about CPI, how the markets have reacted, how the currency markets have reacted. Let's get some perspective on this. Jamal Mecklai is with us, as well as Madan. Sabnavis is also with us. Madan, let me come to you first. What do you make of the CPI data? What do you make of the structurally low number that has been coming for a while?
So actually, if you look at the CPI data, I think what really comes out quite clearly is that lower food prices, or maybe declining food prices, especially of 2 or 3 categories of commodities, have actually led to the CPI number coming at a lower and lower rate. But if you look at the non-food components, especially if we take out even the fuel component, we have seen that it's fairly sticky in the 5.5–6% range. So I think this trend is something which we have seen for the last few months, so it's not something new. Of course, it was a bit surprising for us that it came at a very low level in this particular month, and 18-month low which we have seen. It's probably not going to remain for too long, because I think the base effect has already worn off, which means that there would be an upward movement, but we would still be in the region of around 3.2% by March.
Okay, but Madan, just given how the CPI has fallen to a multi-month low, an 18-month low to be exact, are we now looking at an RBI rate cut in the Feb meet?
No, to my mind, I don't think that will happen in a hurry. And I'll tell you the reason why for it. See, the MPC is definitely concerned more about core inflation. Because if you're looking at what part of inflation can be affected by monetary policy, it's the core inflation. It's not food inflation, which is being driven by supply side factors. And as long as this number remains intransigent in this particular range, I don't think the MPC will be very convinced that inflation will be coming down. Now, even on the food and fuel inflation, I think there are definitely certain upside risks. When I say upside risk, not an upside risk which pushes up headline inflation to 4%, but it's something, the risk which will push inflation beyond, well towards the 3% mark. One is that if you look at agricultural prices during the Kharif season have come down because the MSPs have not worked. Now with the elections coming up, there will be a certain drive on the part of the government to ensure that the farmers get better remuneration, which means that farm prices are likely to move upwards. Second, if you look at fuel prices, we've already seen that the Brent has come towards the $60 mark. And as we move towards the April-May period, when that 6-month period lapses, I think there would be a tendency for fuel inflation also to increase. So keeping these factors in mind, the RBI would probably change the stance to neutral, because I don't think there's a case for tightening policies in the next few months. But in terms of a rate cut, I think they would probably wait for some more time before taking such a call.
Okay, Jamal is also with us. Let's bring him into the conversation. Jamal, when it comes to the data which was released yesterday with regard to inflation, a lot of analysts have raised fingers about nuances which are still not clear with regard to rural education, health and so on and so forth. What are some red flags, or are there any such red flags that you've also observed which are not clear yet regarding this macro data that came out yesterday?
Well, I think, the argument, I don't know, didn't get the name of the guy who spoke, was very well articulated. I think the truth is, the central bank's job is to be careful, all right? And there's lots of short-term fluctuations, food prices, for example. But again, as we know, with the election coming up, there's going to be a lot of spending. So Chancellor, I think he's quite right that we're not going to see a rate cut right now. Market, of course, jumped on it and has pushed the rupee weaker, But again, it's not moved. I mean, it moved, I guess, yesterday quite a bit. Now it seems to have steadied. In terms of red flags vis-a-vis inflation, I think he raised all of them. In particular, there is oil. There is also the other issue, which is, I don't know when the 6-month period of the Iran sanctions ends. I think it's in March, April again, So there's lots of events creating uncertainty coming up for the market. So I'm not seeing the rupee weakening very dramatically from here, at least not at this time.
Right. Jamal, what would you have to say about Brexit, how important that event will be for global currencies?
Well, that's a big trick. In fact, I'm just working on something over there. I mean, what's interesting is that the sterling has already fallen quite a bit. it's quite low, relative to its range even since the start of Brexit. So I'm not sure there is that much more room for it to fall. And in any case, everyone's sort of taken their positions. People are things off of offshore from the UK. I think so. If at all, since everyone's expecting a terrible situation, market often moves in the opposite direction. You could see a bounce. So I would say people who have sterling exports could try to ride the market a little bit, but they need to be very careful and keep a stop loss. Because, if it turns, it could turn very sharply as well, right? Even though there's not very much room, but then the sterling dollar comes down, that gets multiplied by dollar rupee and it goes to hell.
Right. Madan, just a word on the upcoming budget and how would you see that? You think how would the bridge between the GST shortfall and what happens if any farmer support schemes comes? These are the two important things to watch out for.
Yeah, sure. For the 1920, I think that is something which we would be looking at. But again, I think we'll have to be a bit cautious about the budget because it's an interim budget where you don't really have that much of scope of bringing in anything new. So even things like loan waiver, unless you're able to justify saying that it's absolutely expedient and something which has to be done because it's an emergency, I don't think there can be too much of allocations beyond what is permitted within the 3.3% fiscal deficit number. Well, I think that was what was done in the earlier interim budget where the call was taken that, okay, there are certain major problems which are there in the economy for which we're making provisions, but I don't think we can have 30,000, 40,000 crores of allocations which can be run through the parliament finally. It has to be taken by the new government which comes and presents the budget in June, July. So I don't think loan waivers, but I think it's going to be more a case of making certain positive or affirmative statements about what could be the likely stance taken by the government if it comes back to power. I think that's what's going to dominate the content of the budget. In terms of GST, definitely there are concerns today that 1 lakh crore of collections on a monthly basis has definitely been breached on more than one occasion. So that is something which would be a running concern for the government because if we don't manage that by the end of March, I think there will definitely be a case of certain slippages in the fiscal deficit number, which so far we believe would be maintained at 3.3%.
Madan, thanks so much for that. Jamal, always good to get perspective from you.